Okay, let's unpack this. We're diving deep into a fascinating report on, well, what feels like a brand new gold rush. It's not just about the usual market forces this time around. It seems intricately tied into these surprising global power shifts and, believe it or not, the powerful, often unregulated world of financial influencers or finfluencers.
Yeah, exactly. And what truly sets this gold rally apart, I mean, what the report brilliantly uncovers isn't just market fundamentals. It's this seismic shift in global power dynamics, fundamentally changing how nations and even individuals view gold. And then it's amplified by this new, sometimes shadowy wave of digital financial communicators. It's really not your grandfather's gold rush.
Hmm. So our mission for you today is to cut through all that noise, understand why gold is booming right now in this very modern landscape, and also uncover some of the hidden dangers maybe lurking in online financial advice, and ultimately empower you to become a more savvy investor navigating this whole thing. So let's start with the bedrock, the fundamentals. The report highlights a pretty significant geopolitical premium driving gold. Specifically, it mentions the weaponization of the US dollar, like the freezing of Russian reserves that sent, well, shockwaves through the global financial system. That really made central banks everywhere sit up and take notice, didn't it?
Absolutely. That act raised a critical question for central banks, especially, in rapidly emerging economies like China and India. And their response, they dramatically accelerated their gold buying. We're talking over 1,000 tons annually for 3 straight years, 2022, 23, 24. This isn't just simple diversification. The report calls it a de-dollarization supercycle. It's
Yeah.
establishing a new, higher, and frankly far more resilient price floor for gold. It's a really strategic long-term move.
Right, that phrase, de-dollarization super cycle, is pretty powerful. It makes you wonder about the dollar's long-term status. Is it being fundamentally undermined, or is this more like tactical diversification?
Right.
But okay, while the central banks are building this strategic bedrock, the report unveils this other force, maybe less regulated, this finfluencer phenomenon.
Yes, and here's where it gets really fascinating, maybe a bit concerning too. The report details the meteoric rise of these influencers on platforms like TikTok, YouTube, you name it. They use incredibly compelling narratives. They frame gold not just as the old safe haven or an anti-system asset, but surprisingly, they pitch it as modern and accessible. Championing the idea you can invest with just like RP 10,000 or even a single dollar.
So basically, they're kind of the digital age gold prospectors, just maybe without the pickaxes and with much better lighting. What kind of tactics do they actually use to pull people in, and what are the risks the report points out?
Well, they skillfully leverage psychological triggers, things like FOMO, the fear of missing out, and social proof to drive engagement. But, and this is critical, the assessment reveals rampant conflicts of interest. The report found a staggering 75% of influencers make no disclosures about their financial incentives. None. That's potentially a ticking time bomb for investors who aren't, super careful. We saw this play out, for instance, with the Indonesian influencer Felicia Chisasaka. She promoted a P2P lender that's peer-to-peer, which later defaulted. Those platforms, they connect borrowers directly with investors, right? Bypassing banks. When they fail, investors can get hit hard.
Wow, 75%? That's alarming. Why is that lack of transparency so common? Is it just negligence, maybe? Or is it more like deliberately exploiting loopholes in the regulations? And given all this, what does it actually mean for your portfolio? We know equities historically offer better compounding returns over the long haul, but gold still proves its value, right? As a powerful portfolio diversifier, a kind of crisis hedge.
Exactly. And this raises the important question for you. How should you strategically invest in gold now in this landscape? You've got choices. There's physical bullion, of course, which eliminates that counterparty risk you hold it yourself. Then you have highly liquid gold ETFs, exchange-traded funds, which are convenient. Or, for smaller regular investments, these digital gold platforms are popping up. Low entry point accumulation. But each one, physical, ETF, digital, it comes with its own unique costs, benefits, and risks. They really need to align with your specific investment plan and, frankly, your comfort level.
Okay, so with so much at stake and such a clear risk profile, especially with the finfluencers, you might be asking, is anyone stepping in? Is anyone policing this new digital frontier? And the good news, according to the report, is yes, regulators are finally starting to catch up globally. Indonesia's OJK, their financial services authority, is apparently moving towards mandatory certifications for advisors. And the UK's FCA, the Financial Conduct Authority, recently had a global week of action against illegal finfluencers that led to arrests and content takedowns.
Right. This tightening regulatory net is definitely closing some loopholes, which is good. But for you, the investor, it really means the burden of due diligence has shifted squarely onto your shoulders. You absolutely must verify the source, verify the product being pushed. You have to question the Finfluencer's motive. Is there a hidden incentive? And always, always prioritize diversification in your own portfolio. The era of just blindly trusting online advice, well, that's over.
So, for your final thought today, perhaps the most durable strategy in this modern gold rush is actually to emulate the market's biggest players, the central banks. Think about building a core strategic allocation to gold, treat it almost like portfolio insurance.
Yeah, and if we connect this to the bigger picture, you can then use all that noise from the Finfluencer space. Not as a direct advice, obviously,
Hmm.
but more as a real-time sentiment gauge. Use it to inform your tactical decisions, maybe leveraging some of that market emotional volatility to your own rational advantage.